Tech boards, what matters to investors. Welcome to the Better Boards podcast series, the podcast for chairs, CEOs, non-executive directors, company secretaries, and their advisors. Every episode is filled with practical insights and learnings from those inside boardrooms. We discuss what really matters and highlight actionable steps you can take to enhance the performance of your board. This episode provides invaluable insights into the investor perspective. It helps you to understand what are investors looking for, what are the KPIs they are using, and what characteristics do they want to see in the directors, what works in boardrooms of tech startups. I'm delighted to talk with Irene Arias Hofman, the Chief Executive Officer of IDB Lab, the Innovation and Venture Laboratory of the Inter-American Development Bank Group. The purpose is to discover new ways to drive social inclusion, environmental action and productivity in Latin America and the Caribbean. Irene, thank you so much for contributing to the Better Boards podcast series.
It's really nice to be here, Sabine. Thank you.
Irene, let's jump straight into the subject, and maybe you can describe a bit the context you operate in. But what are the characteristics of the boards of the most successful companies in your portfolio?
Great. So the companies in the portfolio are startups, typically startups that are at the stage of raising Series A, Series B. In that context, we care both in terms of the boards of the startups themselves, but also in terms of how VC funds operate, because very often we invest alongside VC funds. And so we care at both levels on how they operate. VC funds obviously are totally different than governance standards for portfolio companies. Portfolio companies have outside board of directors and shareholders, and we look at the portfolio company level. Again, even though VC funds, of course, are completely different and they have some legal rules in terms of disclosures, but they are private partnerships. And so the governance terms are completely different, but we do care a lot about the principles, the values, the incentives, and the composition also of the GP, the general partner of the fund, or the principal funds alongside which we invest in the portfolio companies.
Okay, understood. And when you look at the characteristics of the board of really the companies you invest in, what does good look like? What does good look like from your perspective as an investor?
So first, the mix of skills. Often the companies, the startups are digital native companies. They are tech-based, and they tend to begin by having, obviously, the founders themselves on the board, and they tend to be more heavy on technical tech skills than corporate or sometimes other strategic skills, and certainly skills that would prepare the startup for what may come later if they are successful and they have to become more institutionalized, and they need to bring in a whole set of other aspects in terms of organization and management and good principles that they didn't have to worry about when they were just like a 2-people team. So they kind of face the reverse problem than, let's say, a fintech. And more than 25% of our portfolio companies, of the more than 900 startups that we have invested in, are fintechs. So fintechs and neo companies tend to be very well equipped on their board in terms of tech skills, and have the reverse problem of some TradFin or traditional finance companies that may be more on traditional finance skills, but not necessarily on tech. So maybe like rebalancing in the reverse by bringing, for example, once they start growing and they become like Nubank, for example, if they evolve from what they were a few years ago as a startup to now the largest digital bank, or one of the largest in the world, they started quickly having to acquire on the board very different skills, that people who could understand the banking regulations, who could understand better how to handle what has been a massively successful international expansion, and who could understand sort of how to deal with the even sort of government relations. So finding the right skill mix and how the startups evolve over time as they, if they are successful, grow very quickly and start facing completely different set of issues as they become more part of the more mature sort of corporate world is very important.
So, and what do you think do these successful boards do differently than those that you see that are struggling?
So partly startups, you may think like they have not very much choice in terms of who's on the board, because investors typically, if they put in a ticket that is big enough, they would expect to sit on the board. And it doesn't mean that they might be the best fit.
Exactly. Yeah.
So making sure that they can properly select the investors and what conditions they set so that they don't end up with a board that is made up of directors that are not really adding the value, and ensuring that they keep enough control of that they have more control than or more choice that maybe what they think in terms of who's on the board. And in that sense, I think that they can have a more deliberate approach to, one, bringing the right industry expertise. Like if some startups in some very, very nascent VC markets, they might be able to build a startup that has a very generic solution, like payments solutions, for example. So dLocal, it's a unicorn in Uruguay. It was like a pretty horizontal solution. It had been done in other markets and they've done very well, but it was more like adapting a solution to local conditions, but something that has existed before. More and more, as the VC industry becomes larger and more sophisticated everywhere in the world, solutions have to be far more specialized. And so having the right industry experience and this wealth of knowledge on direction, on forecasting can pay off. The second is funding, because startups are always fundraising. You know, they finish one round and they're already thinking of the next one. And in between cycles, board members can play a very important role in terms of building or nurturing a list of potential investors and just keep that going, getting feedback from potential investors and identifying what milestones to funding could be and what could be the roadblocks and concerns that could come up while the founders are busy in the day-to-day. And so that's a second important in terms of like shaping the board so that you have that support as well. Third, I think diversity, because the data is out there. Only 6.2% of board seats in unicorn companies are held by women. And
wow.
Yeah, it's far less than sort of in the average corporate world. And we also know that companies with one or more women on their board have 36% better stock price, that they grow, that they return more in terms of return on equity, like 46% more. And if the startups are aspiring to become these large companies, they better prepare from the beginning, both in terms of co-founders and people in the C-suite of the startup as it grows, as well as on their board. But we're very far from that today. And finally, and this is sort of, very, very important, it's more cultural mindset than anything. It's board members that really believe in what the startup is set to do. Because usually they start, and if they are good, I mean, you're betting on teams. You are not really, you don't have a lot of data and assurance in terms of like tons of track record and history of the company. You're betting on teams, and teams that really believe they can change the world with their solution, and they feel passionate about it, and they're gonna have like the grit to go through all the ups and downs of the startups. If the board doesn't embrace that kind of view or vision, and they're not willing to embrace failure when things go wrong, and a lot of things go wrong, then there's going to be a huge kind of clash, I think, all the time. And, 75% of VC-backed companies fail. So if you have super conservative board members from the beginning, when you are at the very early stage, again, I'm thinking of startups that are pre-C round of funding, then it's going to be a struggle. So those are the four things I can think of: industry, funding, diversity, and that mindset.
No, fantastic. And You alluded to it, but in a way it's a kind of sexy, to be a member of a startup board these days. But what should these board members really bring to the table? What are you looking for? You alluded to it, but maybe you can summarize it a bit. What would make a good board member in this specific context of startups?
First, availability, right? Because it's become trendy, and it can be good to do and to say you are on the board of a high growth tech startup, but you have to be really available and committed. So I think that would be number one, and to be invested enough that you're going to sort of build trust among the other board members and with the founders of the company, or which tend to be also the CEOs of the company. And that's just like foundational. But besides that, I think a little bit further than what perhaps board members in larger corporations would do in terms of some of the critical make it or break it situations that startups face all the time. Funding is obviously a very, very important one. So, in certain situations, if you have a local network of co-investors that you can bring in, you can introduce, and that you can nurture as potential future investors for the company, that's really valuable. So that's one big area of value add. But again, like mentioned before, the industry expertise. And then as if the company does hit all their milestones and is really becoming more established, then bringing in knowledge from the more of the corporate world so that the company is prepared early on for what's to come. It's important. And there I would highlight particularly kind of helping the companies be ahead of regulation, because a lot of these tech startups are in fields, and we've seen it with AI and AI safety and safety rules that are coming up, and responsible and ethical use of AI. The earlier you build into your AI model the key governance and data governance principles that will then ensure that your model is robust from that point of view, the less painful it's going to be later to comply with what inevitably will be some form of regulation. Some regions, of course, like Europe, are far more advanced in that front. Others are a bit more loose. So I think that can be a very, very useful role of a board member for a startup.
No, that's really, really helpful. And the other thing of VC-funded startups or where you co-invest, it is well known that you use a lot of KPIs to measure progress. What are your personal favorite KPIs that you find most helpful to see the progress of an organization and that you would recommend boards are using and focus their attention on?
Yes, certainly, looking at the revenue, cost of goods sold, the profit margin, and understanding what is the burn rate. A startup, if they don't have at least 9 months of runway, probably be in trouble. So keeping understanding and forecasting well your burn rate or cash flow, it's really important. Unit economics, it's a classic. So the price and cost of what you sell will only get you so far, right? But if you really want to know, are you going to build a sustainable business, then you need to look at the profit you earn on each unit that you sell. And it's not obvious. It's not necessarily a quick calculation, and you can look at different angles for these. Like you can look at lifetime value of a customer, so the amount that the typical customer will spend over time in that product or that service. Your churn rate, with how frequently customers stop buying from you. This is super important. Like we invested in a health tech company in Mexico, and the growth in customers and the usage was very good. But then we realized the churn rate was really high. So that means like it's not going to be very sustainable. And then a customer acquisition cost, no? So how much you have to spend on marketing, promotions, incentives, which, by the way, it's something that I didn't mention in terms of the characteristics of board members, but a board member, for example, in terms of industry expertise, it could be a sector, but it could also be marketing, which startups at the beginning, because by definition, they are dreaming about this total addressable market, another KPI, as something that they're going to achieve and they're going to go for. But often, if they want to maintain in control their customer acquisition cost, they need to have a really, really savvy marketing strategy. And so that's another potential, skill set for one of the board members to complement some of the other skills we talked about earlier.
No, that's super, super helpful. I'm looking at the watch. Sadly, we have to come slowly to an end. You said so many things about the characteristics of good boards in this setup, the characteristics, what people should bring to the table, the KPIs. What are the 3 things our listeners should take away from this podcast?
I love your last question. I had heard a lot of your previous podcasts, which I love. I think Better Boards really is fantastic. I was prepared for this. Not that the answer will be by any means perfect, but I would say as a startup, you may be able to pick your board members more than you think of. So don't feel pressured by giving up board seats to investors just to get that investment. It really has to be a good match so that you can build the right skill mix. Second takeaway is that skill mix is going to evolve very rapidly, just like your own startup is going to evolve so quickly. If you have to pivot your strategy, if you become very successful and then you need to become much more sophisticated in terms of how you are run very quickly. So be ready to evolve, including evolve the composition of your board. Third, be mindful of bringing in board members that believe in your vision for the company and that can add diverse views.
Fantastic. Irene, thank you so, so much for your time, your thoughts, and for contributing to the Better Boards podcast series. A big thank you.
Thank you. It's been a pleasure.
This podcast is brought to you by Better Boards, the provider of board evaluation services with an innovative platform. Organizations around the globe use our platform for their board evaluations. Selected service providers are licensed to use the platform. How can we help you and your board? We at Better Boards are always delighted to hear from you. You can best reach us at info@better-boards.com. Thank you for listening.